What's up, everybody? This is Eric. I'm going to screen share for what I think will be a great update today for those of you that are active with us. And I think this is working just fine. Where I want to start, I'm going to be touching on some different charts, some recent ideas that I've put out there, some older ideas, some updates on things that have been moving, a couple of them that haven't been moving that I just haven't mentioned in a bit. But I'll start out with some good news. I mean, we just had 5 weeks ago, uh, officially, I had recommended you'll see these here on your screen. First Majestic silver was trading at 618. That was, I believe, September 15th that you received in the free e-letter my update on First Majestic, and that if you wanted to take a call option play, this is the one that I was doing the most of, which went out to April 2025, $7 strike. Stock's now close to $8. And I had purchased mine and sent that email out at 88 cents per option. What would I do here? So we've more than doubled our money. In these type of plays, what I like to do, even though, I mentioned that by April, gold could be higher. First Majestic could potentially double from where I had talked about it in the low sixes. I think that still could be true, but also, this is a volatile game and there's a lot going on in the world. So, I'm going to look a little bit also and talk through where I think we are in the gold and the miners market. Is it time to be cautious yet in the short term because things have ripped? Where would I, be a buyer in things? Where would I just be sitting tight? Where would I be taking profits? And on this one with the options, I would sell half and just not have any principal risk. That is what I'm doing. I think yesterday, or was it this morning? I sold about a quarter of my options. So tomorrow I'll just plan on selling another quarter wherever it opens up. I don't really care if it's a rounded double. That's the idea. The idea is in the area, like a painter. I don't have stringent rules on something has to hit a certain price, but it's more than a double, so it's appropriate to sell half, and then I'll see what happens with the rest, which could turn into some real money if First Majestic goes higher into the teens by Q1 next year. And even in the end of this year, it could happen. Silver's really looking good, but things are also, I mean, we're 27.48 on gold, 34.82 on silver. Before I get into the GDXJ, let's just look at SLV. Yeah, so I mean, silver's not even overbought yet on the daily, certainly. It's a little different for gold, I believe, not much. I mean, it's really not overbought. You've got the miners, they're all starting to get these little tidbits. This is usually what you want to look for are things that are stretched. This dark green goes up into the 90s, but that's like an ideal standpoint. They stay overbought, but then you're going to have a sharp retracement at some point to cool it off. And, this can continue. Look, I mean, we've had these green edges along the way since this just goes back to March. And obviously, GDXJ, would it have made any sense to be trading this thing, trying to pop out of it right here and buy it back and do this and that? I don't really do that very often. I think if it gets way up here and gets overheated, it will make me just more susceptible to possibly trimming very profitable positions, raising some cash, things like that. But the biggest point in this game to me is that we're in a bull market. That is clear. We're in a bull market in gold, a bull market in silver, a bull market in mining stocks. It's affecting them in different ways. The leaders, the producers, they've been breaking into new highs. We still have little junior miners that are just completely crushed. Nobody cares about them. Those will eventually come to life, mostly across the board. but you got to pick your spots. And it's also why, I've focused on some of these, few of the mid cap larger plays and, things like First Majestic, even though that was an option trade. Because it does take a little time for certain things to get their footing. I mean, some of you may remember Focus Mining, which was mostly a premium and elite deal going back last summer, I believe, is when no, last November. Yeah. So it was about a year ago, I believe, that we ended up uh, participating in a financing and started to buy stock in here. So it's taken a while and it had a couple of pops up and then it was looking like a real dog very recently. So, this is what happens is that I think like in this area, especially when that time goes by, um, and you're just really uncertain with things. I've covered this in the free e-letter and, some of you may have it. You may want to watch it because I think it's got legs to it, in this case with probably in the ballpark of after their next drill program with updated resources and things and the price of gold, something in the ballpark of a 3 million ounce deposit and trading for a very, very cheap per ounce price, which is, yeah, I mean, this thing's still at 9 cents is like an $8 million US market cap. So I'm looking ahead a little bit with that historical, some of the historical drilling and their modeling, but I think that with this deal, it's not a super high stretch or risk to say it's going to be at least 2 million ounces at a gram in Quebec. It's not a stretch to say 2.5, I think. So even then, so say it was two, you're talking about $4 an ounce in the ground. Could be a lot more leverage on Focus. But as I was mentioning, when you see this is on the weekly chart, I was just going back. When you see these dog laggard things, it was easy to get discouraged, but I held through it. I actually have had a very big position in this one for a while, and I didn't really buy more. And I didn't focus on it much during that time, but held, and I'm glad I did. I'm really not taking any of this one off. I think they've got a really good group that's in place that has taken this thing over, and they've got clear goals and ambitions to update the resource. And probably this company won't exist by the end of next year, is my guess. It'll be taken out and likely at much higher prices. But then that said, you have had this thing overbought a little bit. It's coming up to a benchmark number 10 cents. That being said, it broke to new highs just recently. So um, I don't know. With Focus, I think it's more if you've got a little bit of a long-term horizon, it's more of a buy than a sell. I'm just at a hold with this one. It could easily pull back, but uh, I don't think it's going to pull back too much. And it's not super overheated here. So that's just a random one. I also wanted to mention from the last update, Oklo Energy, which I've recommended here a number of times in the past year, which is a nuclear fission play. Fission. This thing's had a short squeeze. So I was recommending it, in the summer and things 8, 9, $10. I think I mentioned it a couple times in premium as it got cheaper, and then it just absolutely has taken off. And some of these plays have had short squeezes in the US. They got over shorted and people noticed, and nuclear has been coming back and they just have been getting squashed. With Oklo, my cost is probably about $9, maybe a little less. I sold 1,000 out of 10,000 shares at a little bit higher than this yesterday. Um, so it's going to be volatile, but I thought this was volatile. NNE had a short squeeze back in the summer, 4 to 10, pulls back to 7, then it goes to $38 in a true squeeze fashion. So Oklo Energy, I'm holding most of my position. I don't really have a target. If it gets to the point where it's it's in the mid to high 20s quickly, I will sell a third and have no risk for it and then just hang on to it as a position. Um, Yeah, GDXJ looked at AG. We're probably going to see on First Majestic, I would think we have some resistance in those low eights coming up. Could run into a little resistance there, which is why I think it's appropriate and prudent to have half of those options taken off the table. Those of you that have been around with me for a bit will know that I've been a big fan of Bitcoin and crypto since 2016. And I did some Bitcoin updates recently. I think that Bitcoin is getting very close to bursting through its previous high in the low 70,000s. But we'll see. It looks very good. But this deal, Cypherpunk Holdings is what it was called. It still says that here, but their name now is actually Soul Strategies. And this thing's pretty wild because we actually played this back in the day here into that run into 2021, which was a nice win, but it actually didn't even perform as well necessarily as a lot of the altcoins and things of that nature. And it had a big retracement and it was a long, boring wait, but we bought more and I encouraged it during this entire time because it was trading at a discount to net asset value for a long time. They've switched gears. This thing is very interesting, but if you hold HODL or CYFRF, my suggestion as I put it out when it broke 60 cents in that last update that I put out, that I had sold a quarter of my position and that I would sell another quarter when it got near $1, which is where it is. So I'm out of about half, 40%. I'll probably be out of 50% tomorrow of my HODL because I'm up 10x on this bad boy. And it's overbought. It can stay overbought. And the reason this one's really interesting, it could stay elevated or even go a lot higher, even though there is risk that you're going to get some sharp pullbacks with a run like that, is that when you look at Michael Saylor at MicroStrategy, MSTR, on the NASDAQ, who basically was early with Bitcoin accumulation, started to issue debt and just buy Bitcoin and bank it. It became a pseudo Bitcoin ETF before the ETFs were approved earlier this year. MicroStrategy still has a premium to its Bitcoin holdings because as a corporation, its balance sheet is chock full of just Bitcoin. So it's still a proxy for Bitcoin. And this now being Soul Holdings is completely a proxy for Solana, pre-ETF equity way to have exposure to Solana. Now, when I buy it right here, nope, I'm up 9x. And we've had the chance to do that for a long time. Our patience is paying off here. Luckily, it's paying off in various areas. I think that a lot of these moves in the miners and in crypto are early-ish, but the ones that get ahead of themselves, sometimes they do that for a reason because they're going to be a leader. Sometimes they get ahead of themselves way too much, and you have to start to be careful. Sometimes these things, generally, like at a frenzied top, I don't think we're there yet in crypto, certainly, but we are seeing this thing with Soul is at 93 RSI. It's pretty overpriced. But the Solana itself is not even past new highs, and neither is Bitcoin. So if we believe those are going to new highs, this Soul Strategies could really tag along with that. And I don't really put a cap on it, but what I was going to say is that the frenzied late stage bubbles that happen, whether they're cyclical or secular, when they start going and they're vertical and parabolic, you have to sell into those. That's the only way I know how to do it, and have consistently made money in this game, even though there are times where I miss completely, like on a Carlisle Commodities or whatever, and they become duds. And I'm still sitting on, all the stock that I bought in that one in placement at 8.5 cents is at 2. Bought more in the teens, and I'm just sitting on a dud. But that's why it's important for some of this diversification. As long as you have these big winners that are happening as well, it can be a very profitable place to play. So I want to talk about, even in my last update, I was talking more about my bullishness on Metalis. Guys, this one, I'm in this one for the intermediate to long term because I think there's tremendous upside. Now you look at the chart with the higher highs, the higher lows. I see this continuing. Right now it's at a higher high. So, um, this to me also it's a must own junior mining company. Just for example, Metalis has a $15 million Canadian market cap, and they are neighbors with Perpetua Resources, which is hitting brand new highs and is almost $1 billion market cap. Now they've gone a long way and done a lot of work. They've got 5 million ounces of gold, but the antimony or antimony, as some people pronounce it, is the war metal for ammunition and other things that we are very short on, which is why Perpetua has gotten $1.8 billion of US government support in grants and debt to build their gold mine because they've got 0.06% antimony as part of a byproduct resource that the government wants and needs desperately to be in production. Metalis has chunks of 1 to 4% antimony laying on the surface that we have seen these results come out in addition to very high grade gold and silver and zinc and other metals and materials. Look at that gap. I mean, I think like a Perpetua is going to watch Metalis closely as they take that recent money from the financing and go do more work and or drilling. And if you can, I think it could end up looking like a steal for Metalis to be bought for 100 million Canadian, which is 6-7 times the price here. And that is what I'm thinking in terms of where this thing can go. It's going to take some more work, but there are such good signs on this one. And really, I think that also, their flagship project, Kirkham in British Columbia, in the Golden Triangle, is a gold copper asset that's very attractive. How much of that is, worth the 15 million? How much of it is the new project in Idaho? I don't know, but the antimony piece alone, watch Perpetua. Perpetua continues to do well. Metalis should start to really gallop because of that low market capitalization. I just wanted to show also, I'm going to write some of these and post some of these charts, and I don't want to make this too long. So hopefully some of you watch it. Most of you watch it. Phenom, everybody knows. And if you're new to the letter, welcome. This is my biggest position, my favorite stock. And, it's at 50 cents Canadian right now. I've got a tremendous amount of securities on the books that I've bought for the better part of 6 years. Most of that's happened since June of 2020. But we made a lot of money on this one before, going back in 2018. Vanadium and gold play. It's turning into one hell of a Nevada exploration gold portfolio run by Dave Matheson. Anyway, just check out the chart. You're seeing, we know that volume precedes price generally. The spikes in volume here was a good sign. We've seen it ratchet up, and now it's getting very tight in a flag, which I see going more likely than not. This is bursting higher. And then this level of resistance that we've had before in the mid 60s, now that we're building this base and already did this pullback, my guess is it goes through it like butter this time. We're getting the resistance here. There are some sellers the last couple of days. I believe I know who it is, and I believe that that is going to end very soon, and we will be overwhelmed with buying and see definitely some new 52-week highs in my mind. Nothing's guaranteed in Phenom, and potentially just lots of catalysts going on for this thing. And we have a lot of our shareholders are diehard shareholders here with Phenom, and none of us are really willing, the diehards that is, to give up many of our shares until they're much higher prices. So I think Phenom's looking terrific. I think we're in good shape with a lot of these deals. So a couple of the ones that have not performed much yet, I'm just going to keep this brief. I'm very bullish on I-80. I think it's a steal. Look at GDX. Look at this. So I-80's hit resistance at its 200-day moving average. Look how far GDXJ is above its 200-day moving average. I-80 is a laggard, no doubt, but that to me, with the quality of their asset base in Nevada, is going to play catch up at some point. So I really like I-80 for a bargain in the sector in a developmental stage with a number of assets that could be company makers on their own. And then I just want to mention Giga, which obviously I've covered for a long time. This is a nickel play. It looks like shit still, but I remain super confident and very, very long Giga, which raised some money and basically is not going to have to raise any more for a bit. And what could happen though? So here's where I feel like with Giga, my cost average is in the mid 20s. I'm not worried about it at all, but it's one of my biggest positions. And I'm just being patient with it. If it goes much lower back to like a dime or something, I'll buy more. But I would be buying it all day, right here in the mid-teens Canadian, or below that certainly. What can happen though? We're in October, going into November and early December on the tax selling side of things. People do have profits in other gold miners, in silver miners, and special situations in the producers, in crypto, in the S&P, in big tech. And so when you have a flounderer like a Giga, it can be a candidate for tax selling. We're probably seeing some of that this month already, which is just why it's weak. But they have a very substantial budget lined up to start to market this thing, and I'm confident it will turn. And when it does, it could start to happen pretty quickly. But right now, just yet, no major catalysts are here. But I just wanted to touch base on it and let everybody know my position is as big as ever, and I'm just being patient with it. I still like nickel quite a bit as a catch-up metal that is around $8 a pound. That I think is going to end up at least after Q1 next year, with some of the piled up supply that we've seen come into the market out of Asia, that is going to get cleared out. And we could see some very blue skies for nickel plays, copper as well. These things, lithium is even looking like there's a bottom potentially forming in those stocks at this point after a protracted bear market. Uranium looks great, and there are some great uranium plays. We've got a few secret ones in the premium spot that I'm going to be featuring again in the next day or two. And we've got some other sniper deals that just are ready to play catch up. A lot of the small ones that I think will be favorites to rotate into, the ones that we are killing it on and making big profits on and building cash positions. We'll pick our spots. I think, just look into this next month going into year end, into the election. A lot of people are waiting for that turnout. I don't even care. I mean, I do not care, because I don't care who it is. There's no stopping the helicopter money. The fiat debt-based fractional reserve central banking system is what it is. And whether you're a Republican or a Democrat, you're printing money to survive, or your political career will die. And that is a driver for gold. That's why we've got our safest money in physical gold as a hedge against the global system that is upside down in debt and will likely continue to be the case. So protecting your purchasing power is number one. Hopefully we continue to get alpha and now make up alpha in a bull cycle in metals into the mining stocks as that trickles down to the smaller ones. I think that there's a lot of upside in some of these plays that could just really start to catch fire. I'll get more vocal like I have in a lot of these in our elite and premium. There's some bargains around in nickel and other assets that are just ridiculous, like crazy ridiculous, that I'm 60% underwater on. And join us in premium if you want some of those picks early. I really do love the fact that, and want to share some of these ideas here in the e-letter for you guys, but it's just not as in depth. I don't harp on stuff as much when I've got that conviction that things are going to happen. It's a great time to be involved in this sector because it's still pretty early in the breakout when you look at things from a long-term perspective, with gold finally breaking out. I mean, go back to October, November, December, January, any of the Real Vision interviews, Real Vision on YouTube with Roger Hurst, with the series we did, Investing in the Minefield. Look at any of those videos and look at what I had predicted. I'm not always right, that's for sure, but with gold, it's been spot on. My minimum target, after it broke that monthly resistance point in the low 2000s, I had said that, especially after we get 2 months under our belt, within 9 months, we would see 2,700 to 3,200 bucks. And we just saw 2,700, and it happened. That close, that one that we were looking for, was in March. So it's happened in what, 6 months? So it's been pretty good. So, listen, would I be buying physical gold right this moment? Wait for your pullbacks, guys. We're in a bull market. You don't need to chase stuff unless you're an accumulator and a consistent accumulator and you feel like we're going a lot higher in time, fine. But wait for some of the pullbacks, when this stuff gets really strong and it's in the green areas. This could just be starting a green area, by the way. I wouldn't be surprised if we go right to 2,900 in gold before we have some pullbacks. But, if you're in a bull, the key is you are holding and or taking some off into super strength and then waiting. You're looking to buy and you're under allocated until you get the relative strength back closer to the 50 line, instead of always only jumping in on emotion when you're above 80 or 75 or whatever it is. I'm not calling my gold dealer to buy physical gold at the moment. If it gets cheap again or there's a big washout, I will buy more. But I am, we've been bullish on this stuff for a while, guys. So we should be locked and loaded. I know I am. I am locked and loaded in two areas for sure. And that is crypto, Bitcoin, gold, mining stocks, metals. Let's call it crypto and metals and mining. This is where I have over 85% of my net worth. And I'm pretty pumped about it. I hope that helps some of you guys with touching base on some of these positions and how we're looking at things. That's all for today. Have a good day. Cheers.